Coming up on the SBS On the Money podcast, precious metals rallied to a record. China's economy expands, but the birth rate is at a record low. And we take a look at the investment themes for 2026. All of that and more next. Hi everyone, welcome to the SBS On the Money podcast for this Monday, the 19th of January 2026. It's a day where the Australian share market fell, the S&P ASX 200 off by 0.3%. We'll have some more details in a few moments. But first, investors have flocked to so-called safe haven assets after US President Donald Trump's threats to apply tariffs on Europe as he tries to pressure them to purchase Greenland. Gold and silver once again hitting record highs today. For more, I spoke with David Bassanese, the chief economist at Betashares. David, on Donald Trump's threats to take Greenland and throw extra tariffs on Europe, haven't we seen these types of tariff threats from Trump before? Because there was even that term TARCO, Trump always chickens out before. Isn't the market used to this?
I think they are getting used to it. I mean, we did see these tariffs. Well, look, last year the tariffs were because of unfair trade practices and, efforts to reduce the US trade deficit. Now they've just been seen as a weapon of, economic coercion, if you like. He has, he's threatened them at various times. And I think the markets are starting to sort of look through it a little bit, see it as maybe the opening gambit of part of a larger negotiation. But, we'll see how it plays out. But, yeah, the markets so far at least are taking it, with a grain of salt.
If they're taking it with a grain of salt, why are we seeing things like precious metals, your gold and silver prices hit record highs when they're the types of things that does well during times of uncertainty?
Yeah, look, I think that is understandable. I mean, if we do get a geopolitical upsurge in not only tensions but military conflict, as we saw when Russia invaded Ukraine, it can disrupt markets. It can put upward pressure on commodity prices, and it can lead to gold and silver being seen as a safe haven when things like US treasuries, things like the US dollar may be no longer the safe haven they used to be, given that the US is now the instigator of a lot of these tensions. So it's seen as an alternate flight to safety, if you like.
And finally, how do you see all of this playing out? Because you think that Trump's move could ultimately backfire. How so?
I think it could backfire in the sense that, look, he's basically threatened Europe that unless you let the US buy Greenland, we're going to go ahead with these tariffs. But I don't think any country in Europe is going to back down on the basis of tariffs alone. And it's going to, potentially risk the US economy, even further tariffs adding to inflation in the US. And maybe Europe this time, unlike last year, does retaliate. So I think if he is forced to back down without getting any real deal on Greenland, it just makes his threats look more and more hollow, even more likely that markets start to, see through these threats and they no longer become the threat that they used to be. So I think that's the risk that he faces.
That's David Bassanese there from Betashares. Now let's take a quick look at the Australian share market. The S&P ASX 200 off by 0.3% today, 8,874. 8 of the 11 sectors on the index finishing lower. Information technology, the worst by far, off by 2.5%. Next, you see the company doing well there, the exception. Shares up by more than 1%. It gained development approval for a data centre in Victoria. Telcos, consumer discretionary, healthcare stocks all down. The only sectors to rise today, utilities, materials and energy. Interesting moves from A2 Milk today. That's the infant formula maker. It exports a lot of its infant formula to China, and its shares were put on a trading halt around lunchtime after some data from China, which we'll talk about in a few moments with David Walsh, wealth advisor at Sarto Advisory.
Look, it's just another layer of uncertainty around the geopolitical space. We saw some talk about Greenland last year. I guess the strategic narrative is picking up. He's sort of talked about the fact that the defence forces there can't defend themselves against any Russian aggression. Therefore, they need, US support. There's also the rare earth minerals that are in Greenland, and also the geographic, strategic geographic position that the naval routes can have through there. That's making it really interesting to him. So once again, we have that geopolitical uncertainty. The US market will be closed tonight for Martin Luther King Day, so the futures will be all that they've got for the lead. I'd imagine because the US market is closed, we might see quite a volatile session in Europe. And here in Australia, the uncertainty is creating another sell-off in growth-related sectors, as well as the broader market. So we have another thing to deal with here in the shorter term.
Is there a sense, though, that Donald Trump's bark may be tougher than his bite? I mean, we've seen the acronym last year, TARCO, Trump always chickens out, before. What do you think?
Yeah, look, it's hard to know how this will play out. There are numerous precedents now for these big barks, and then it ends up as a bit of a whimper. So what we're seeing here is, a multi-pronged attack. There's also other, Secretary Besant is also talking about, the impacts they have and why this will be beneficial. So there's a multi-pronged attack here. Something that I thought was worth mentioning is really the Supreme Court will rule, I think it'll be Wednesday, on the validity of the ability to use these tariffs. As you recall, back when they put these tariffs on, he used the International Emergency Economic Powers Act, and the thought is that he's been overreaching his powers here. And so in two lower courts, both the Court of International Trade and the Federal Circuit, they've already ruled that these are unconstitutional. So it may be not so much a TARCO back out, it may be that we get the Supreme Court saying that you can't use these tariffs. And so by the time, it gets to putting these extra tariffs on the Europeans, they won't be legal. So we'll see. Again, it just adds to that uncertainty that seems to come up quite regularly now.
While US investors have to wait to react, where we've seen some reaction is in those precious metals. Gold hit a record high. Silver, more impressively, a record high, up 34% just so far this year. So that's in about 2.5 weeks. Does that surprise you, and can it be maintained?
Yeah, I mean that sort of price rise for a precious metal is surprising. There's no other word for it. And what we saw as speculative buying has really created some fear buying from institutional users now. I mean, solar panel and EV manufacturers need to, and other electronics tech suppliers need to use silver in their supply change. So they would be looking at a 34% price rise in the short term and thinking, well, we don't have a lot of substitutes for this metal, so we need to think about securing what we need. So it's hard to say how this plays out. I mean, these manias, especially if there's a large speculative element in there, could reverse just as quickly. So, we don't have too much of a strong view on the way this will play out, but watching closely.
Okay, can we talk China? Its economy continues to slow while it's expanded for 2025 at 5%, which is on target, the government's target. It's 4.5% in the December quarter annualized, down from 4.8%. How do you think the nation is standing up to international and domestic challenges? And what does it mean for Australia? It's our biggest trading partner, especially as we see iron ore prices stronger than, I guess, what many people have expected.
Yeah, and let's dig into the China data. I think the important point is that December quarter slowdown, one of the slowest quarters that we've seen since the pandemic. So that's raised a few concerns there. They pushed the export lever away from the places where the tariffs went on and really forced other trading channels. So they've responded well there. But really, the domestic consumption, both by the consumers and in the construction markets, has been quite feeble, and that would be something that they would be focused on. For Australia, obviously, with the iron ore price above 100, that benefits us from a tax point of view. We get some tax revenue coming in from there. It'd be interesting to see how that sustains post the Chinese New Year. Traditionally, we get a a bit of a restock into the Chinese New Year period, which is going to be in a couple of weeks. And then we come back and we just sort of see how the steel mills respond there. So short-term benefit for sure. What we will see post the Chinese New Year break into March, we'll get the 15th 5-year plan where we'll get the economic direction for the year. And I would think that they will again be really focused on how to improve the domestic consumption story, as well as, they've been really focused on innovation leading their next leg of export growth. And that's not as steel intensive as it was when we were in the sort of public construction stage. So what that means for Australia is probably we're not going to get this super stimulus for fixed asset investment, but it'll be more sort of them focused on high-tech innovation and the exports of that.
Yeah, other stats that came out today from China was a continued decline in its population as well for the fourth straight year in a row. The birth rate, I think, is also at the lowest since 1949. And this comes at the same time as we've seen a trading halt today on A2 milk, which provides some products into China, right?
Yeah, exactly. I think that the market took that lead from those birthing statistics and sort of we saw a sharp fall in A2 milk. It's gone into a trading halt. There hasn't been any further announcement from the company as yet. But I mean, when you look at those stats, selling baby formula products into a market like that, the investors are going to start to get nervous. It is a real challenge. They've got that demographic cliff in China, and something we've talked about before and focused on is it's really hard and difficult and expensive to have a child in China right now. And the government will need to be focused on making that easier. And you remember a couple of years ago, they really sort of, one thing, they removed the one-child policy in certain areas, but they tried to cut back on this sort of cram school mentality and make the life and expenses that are seen as non-discretionary as more discretionary. But I don't think that's worked as well as they'd hoped.
So with so much uncertainty out there, what are you telling your clients right now? Where do you see the opportunities for investors this year?
Yeah, the clients, the message is the same, stick to the long term, but really with the sell-off, the stark sell-off that we're seeing in the software space globally, some of these previous, growth champions, we're really spending a lot of time digging through here. I think the sell-off is broad-based and it's really momentum-driven now, and there will be some opportunities amongst all of this uncertainty. We're very respectful of the threat that these new technologies will bring and, the AI advancement. But, oftentimes we've seen, as recently as last year, we had these moments, when DeepSeek was announced from China. There's a lot of speculation that all these other AI factories and labs and large language models were in a lot of trouble. It turns out that they weren't. So, the passage of time here will be important because it will take a while for this to be resolved, but we're really digging in there. I think there's a lot of opportunity.
That is David Walsh there from Sarto Advisory, and he wraps up the podcast for this Monday. If you enjoy it, give it a rating or review on Apple Podcasts and Spotify. I should mention he was first referring there to Donald Trump's actions to try to pressure Europe to purchase Greenland and those tariffs. So that was his response there first. I'll see you tomorrow. This SBS on the Money podcast is provided for informational purposes only and should not be understood as constituting advice or a recommendation. It is not personal advice and it does not consider your personal circumstances or objectives. You should contact a licensed professional before making any financial decision.